Gary, Joe, it's great to have you both on InvestorStream to discuss Sacgasco's acquisition of the very large and highly prospective portfolio of exploration and development assets in the Philippines, which holds 6 known oil discoveries. Joe, I'd like to start with you if I can. Could you just talk us through your experience operating in the Philippines and also provide an overview of the assets and indeed the operating environment there?
Yeah, sure. So, hi Alex, very happy to be here. It's my first interview with Sacgasco, so this is going to be fun. It's a very big day for Sacgasco today. You might say I've been working on this acquisition since 2005. I joined Nido Petroleum, in fact, back then when it was in its infancy. It was an ASX listed company at the time with a single service contract in the Philippines, and it wasn't worth much more than $1 million. I left Nido in 2011 as Deputy Managing Director after it had grown to more than 300 million. And over that time, we'd acquired a number of service contracts. We'd brought an oil field into development. We'd run seismic programs and completed a drilling program, making 2 discoveries. So we had a pretty successful, or I had a pretty successful time in my time in the Philippines back then. I spent almost 7 years focusing there and at times living there. So I know the people, I know the local industry, and perhaps most importantly, I know the rocks in the Palawan Basin, and I bring a few lessons learnt along the way with me as well. So I'm excited now that Sacgasco is heading back into the Philippines, and we've got an excellent portfolio now for growth there. The Palawan Basin is one of the last underexplored, proven oil and gas basins in the world, and Sacgasco now has almost 1.5 million hectare footprint over the majority of it. So we've got 4 service contracts in total, 2 of which we operate. And within that acreage, there are, as you said, there are 6 existing oil discoveries with development potential, including a shut-in oil field, and exploration acreage, which has just fabulous prospectivity. So a bit of background on the Philippines as a country. It's very oil and gas friendly. The oil and gas fiscal terms are the best in Asia. It's got 70% cost recovery and up to 44% of the profit oil coming back to the contractor as well. And they're very energy hungry. They've got obviously a developing economy, a fast growing population. At the moment, almost a quarter of the energy mix is natural gas. And all of that at the moment is supplied by the Malampaya gas field in the Palawan Basin. We don't own an interest in Malampaya, but we do have the acreage on either side. Now, what's really interesting about this is that Malampaya is currently on decline, and it's expected to reach the end of its life in 2024. So that all adds up to a great opportunity for any other gas discovered in the Palawan Basin. There's ready-made infrastructure there which could transport gas right to the heart of the Philippines. And that's before we start talking about the oil.
Alex, I think if I could just add there that if anyone's interested in, sort of what sort of regime that the Department of Energy in Philippines is looking for, I suggest you go and have a look at the upstream oil and gas roadmap that was published in 2017, and you can see the very aggressive growth in the oil and gas business and upstream business that the Department of Energy of the Philippines would like to see, and so I think that sends a strong message. If you look at the strategies, it's all about encouraging people like us to get out there and make it happen. And Nido has a great track record of making it happen. We wish and we plan to continue that track record.
Thanks for that, Gary. Now, Joe, could you just talk us through your development strategy for these assets? And given their size, will you bring in partners? And I guess an obvious question that shareholders would probably want to know is, how did you secure the assets so cheaply?
Yeah, so good question. So with Bangchak's decision that these assets were non-core to their business, we were really fortunate to be able to move very quickly to secure them with, as you know, a negligible impact to our cash position. There are liabilities associated with 3 shut-in wells at Westland and Packen, which come with the package. But Westland and Packen is also a significant opportunity, which is very exciting, and I'll talk a little bit more about that in a minute. In respect of partnering, no decisions have been made at this time, but we do have large interest across the portfolio. So it gives us plenty of room to bring in partners if that makes sense for funding the growth of these assets. So we'll contemplate that as we move forward. We do already, of course, have some excellent joint venture partners on these service contracts, which I'm very familiar with, including the Philippine National Oil Company and the operator of SC14 and SC6 Filadrill, who's very well respected in the country as well. I'm really looking forward to working with all of our partners on this as we go forward. So in terms of the forward plan, there's a lot for us to look at now. We've got, as you mentioned, we've got 6 oil pools, Nido 1X1, Tindaloo, Yakal, West Linnapacken B wells, all intersected oil columns. There's a Cadlau oil field which has redevelopment potential, and West Linnapacken A is a very interesting oil field. It produced 8.5 million barrels from 3 wells back in the 1990s, and it was shut in due to the low oil prices at that time, as well as an increasing water cut through an FPSO that was not really designed to handle a lot of water. So there's a real opportunity there to get back in there and redevelop that field. The first thing we need to do as Sacgasco is to assess the discovered resources across these 6 oil pools and evaluate potential development options needed to bring them into production. So coincident with that, we'll also be looking at what we can do to mature the exploration portfolio. Nido's done some really great historical work here, and they've left us with just a magnificent suite of 2D and 3D seismic. It's worth some tens of millions of dollars, the seismic package as it was acquired, and a portfolio of prospects that are very interesting. So we'll be reviewing these in detail as well and determining our next steps for the exploration portfolio, and perhaps there might even be some synergies with a development program. So we'll update shareholders, of course, on our assessment of the prospective and contingent resources through the existing portfolio.
Thanks, Joe. Now, Gary, turning to you, this is another step in Sacgasco diversifying its asset base and entering a new market outside of North America. Can you talk us through Sacgasco's overall growth strategy in light of this acquisition?
Sure, Alex. It's been very simple, our strategy. Look for undervalued assets in underexplored areas and adjacent to strong markets for oil and gas. And gas, is not just methane related hydrocarbon gases, but we're also always on the lookout for helium and hydrogen as supplements to what we're doing there. We're developing a conveyor belt of opportunities here. What we're looking for are opportunities that are low in upfront capital needs. So opportunities that we can develop with a low-cost upfront development plan. Onshore, that's pretty easy around infrastructure, which is where Canada and California fit into the equation very, very well, because we've got such extensive infrastructure that we can utilize. Offshore, obviously, it's a little more complicated, but it's really simple overall. You just need to approach it with a different approach of getting early production to help you bootstrap your production up, to create greater value for the shareholders. I think about it sometimes as a bit of a self-sourcing pudding. You're producing to add cash flow, to then grow the business, to explore and develop undeveloped areas of fields and undeveloped discoveries, to get more cash flow to grow further and enhance the value of the company for the shareholders, because after all, that's what we're here for. So that's the plan, and this asset fits it perfectly.
So Gary, in terms of Borba and the growth of your California natural gas business, what's the focus right now for bringing Borba online and growing production there? And secondly, how's production tracking in Canada?
Yes, Borba, obviously very excited about having Borba and getting Borba online because it is significant cash flow for the company. We're working closely with the pipeline companies at the moment to find their preferred route that fits with our overall strategy. Obviously, we like if we're going to put any new pipeline in the ground, we want to put it through areas where we think are prospective for future drilling. So we're working hard on that. The guys on the ground are working on that every day. Now, that'll lead to increased production in California. We're also looking at all the other opportunities in the portfolio, in California to increase our production, through well work and also exploration opportunities that are Borba lookalikes. So there's a lot of work going on as we speak, and we have some new data sets that we're bringing to the table to assess where we go forward. In Canada, production's coming along well. It's ahead of prognosis when we acquired the assets. The assets are well on their way to paying out, and the high oil prices and gas prices that we've seen in California and Canada are obviously helping that. And everyone knows I'm an oil and gas bull on prices, so we're looking forward to more of that into the future. So everything's coming along well. Obviously, we'll have a more detailed report out in the near future, particularly with the quarterly due.
And just finally, Gary, the chairman in your announcement has flagged plenty of news flow to come. What should we expect next by way of an update as you advance these assets in the Philippines?
Well, I think, as Joe referred to, we want to get an updated assessment out of the resources. That there are prospective resources, in the basin, large prospective resources, and there are contingent resources because we've got the discoveries. So we want to get a third party to have a look at those and update those. Those who are impatient and in the shareholder base who want to get a feel for that, just go back and have a look at the NIDO releases. There's not going to be a whole lot different in terms of that, other than the impact on oil and gas prices, into those contingent resources. Although not a big impact because there'd be reserves if we bring those to play. So that'll be the first thing. I think we also, we'll sit down and make plans now. As Joe said, we've done this very quickly because we saw it as a great opportunity. We'll sit down and now make our plans for how quickly we can get equipment into the area, drilling rigs, etc., and get active in developing these resources and contingent resources that are and discoveries that are already there. So I expect that we'll have lots of news coming forward from Canada, California, and from the Philippines, and we're always on the outlook for more. As long as they're undervalued up front, and we see the value that we can bring to it, we'll get on with it. So that's where we're at, Alex.
Fantastic. Gary, Joe, really appreciate you joining me today to discuss this acquisition, and we'll certainly be keeping an eye on how things progress over the next few months. Thanks for joining me.
Thank you,
Thanks,
Alex.
Alex.